You've heard the cliche. There are only two certainties in life: death and taxes. But here's what almost no one knows. There is one IRS code, written more than 100 years ago, that quietly pays your family back when life hits with its hardest punch. Not a loophole, not a trick, not something you need a $600 an hour CPA to decode. It's a law. Section 101A. The reason life insurance is the only financial tool in America that can create tax-free money by design. If you ever paid a dollar in taxes, you deserve to know the only section of the tax code that pays you back. But before we break this open, you need to understand why the wealthy built entire plans around this. And that's exactly where we're going next. Hello, my name is Robert Balgac. I'm the founder and CEO of Black Swan Insurance Group. And since 2017, we protected over 20,000 families and earned more than 800 five-star Google reviews. So if you're thinking about selling a business, protecting your family, or building tax-advantaged income in retirement, tap the link below to book your tax-free wealth strategy session with us. Most people file taxes once a year. The wealthy use the tax code every day. But before you learn how to use it, you need to meet Laura, because Laura's story is the exact wake-up call every entrepreneur needs. And that's next. Laura is 56 years old, but looks like she's 40. She owns a small insurance agency with 5 agents. This year, she's on track for $400,000 in commission income. Her best year ever. But last month, her husband was laid off. Now she's the only provider for a family of 4. There's still $350,000 in the mortgage. The kids are 6 and 10, and no one in her family wants the business. So here's the gut punch. For the first time, Laura realized she protects everyone except the people sleeping under her own roof. She spent years helping other families avoid disaster, but never stopped long enough to imagine her own family's life if she didn't make it home one night. Then someone explained the section of the tax code she never really truly understood. 101A, the rule that quietly pays your family back when life doesn't go to plan. But to understand the power of this little-known rule, you need to know why Congress wrote it in the first place. The origin story is next, and it's surprisingly human. Most people think tax laws are cold, mechanical, and boring. Not this one. Section 101A was created in 1913, the same year America introduced the federal income tax. The nation was recovering from wars, recession, pandemics, and Congress had to answer a moral question. If we are going to tax income, should we also tax families when someone dies? And the answer was a resounding no. And that's how Section 101A was born, the rule that says life insurance death benefits are excluded from income tax. It wasn't charity, it was logic. Life insurance isn't new wealth. It's replacement wealth. Money to rebuild what's lost, not reward what's gained. Imagine the IRS built a giant toll road. Every paycheck, every business sale, every investment, you stop and you pay it all. But Section 101A is the open lane. Everyone else slows down, but your family drives straight through it, tax-free. It's the IRS saying, we tax success, not serve. And this is the foundation every tax-advantaged wealth strategy sits on. But 101A is only half of the engine, because the real magic is what happens whether you're here or not. When Laura learned that next, it changed everything. She asked me 2 questions every small business owner secretly worries about. Question 1, what happens to my family if I'm gone tomorrow? Question number 2, what happens to me if I'm still here 20 years from now? That's where Section 101A and Section 7702 work hand in hand. 2 gears in the same engine. If something happens to her, her family receives the life insurance benefit, income tax-free. The mortgage, gone. Household income, replaced. Kids' college, funded. GoFundMe, not needed. It's like building an emergency bridge across the canyon. And even if she's not there to guide them, her plan carries her family safely across. If nothing happens to her, her policy cash value grows tax-deferred, and she can access it in a tax-advantaged way through policy loans. Think of it like planting a fruit tree. If life cuts it down, her family still eats from the harvest. If it keeps growing, she enjoys the fruit year after year. One plan, 2 futures, both protect. But none of this works unless you avoid the single mistake that silently disqualifies thousands of families a year. It's a trap almost no one sees coming. And that's next. Here's the rule that separates smart wealth from sloppy wealth. If you fund this too much, too fast, your policy becomes a modified endowment contract, a MEC. When that happens, the IRS says, this is not life insurance anymore. It's an investment. And your tax advantage benefits vanish. Think of it like overfilling a sponge. Once it oversaturates, everything spills out. And to prevent this, your plan must follow the 7-pay test under Section 7702A. Gradual, compliant funding, not overstuff and pray. Design determines destiny. Compliance keeps it tax-free. Now, let's bring it all home, because once you see the before and after of Laura's plan, this all clicks into place. So before, Laura makes good money, but she has no 401k plan for retirement. And if she dies, her family inherits chaos, debt, and uncertainty. After the plan, no 401k? No problem. She leverages Section 101A and Section 7702. Her income builds tax advantage cash value now, and her family receives a tax-free legacy later. Same income, same effort, new outcome. She didn't just protect the money, she built a family bank. And that's the move Laura made. The move you can also make to take control. This is your mo. Section 101A isn't a loophole. It's the original thank you clause of the U.S. tax code. A promise that when you build responsibly, your family won't be punished for losing you. It's how entrepreneurs convert taxable income into protection, liquidity, and control. Because real control isn't about how much you earn. It's about knowing exactly what happens when you stop work. So if you want to see how your 101A could protect your family or your business, click the link below and book your tax-free wealth strategy session with us. And at the end of the day, it's not what you earn, it's what you keep. Enjoy the ride.